concerns about the central bank's autonomy, reigniting the Sell America trade for now. Joining me now, Keith Lerner, Truist Chief Investment Officer and Chief Market Strategist. Keith, it's good to see you. In your most recent note, there is one sentence that stood out to me, given the events of the past couple of weeks. You said, flexibility and tactical awareness are essential for 2026. That might be the understatement thus far of 2026 on the flexibility front for sure. And we do have more news hitting today, as we talked about in the form of these threats to Fed independence. So how do you stay flexible? How do you respond to a news item like that?
Yeah, well, first, Julie, always great to be with you. And you didn't mention it. In our outlook, we called it the seventh inning stretch. But we also said you'd also see some curveballs. And those curveballs, you don't know sometimes that they're coming. And you can argue we've had two curveballs already with the situation in Venezuela and now with what's going on with the Fed investigation as well. So, and we're in a midterm election year. And historically, the one thing that we pointed out to our investors in a midterm election year, you tend to have a pickup in volatility because of some of potential changes along the way. So to your point, that's a long way of getting to your point about staying flexible. I wouldn't overreact to any one headline, right? But it does suggest that we have to pay attention to this and this upcoming earnings season that's coming up, which is going to be crucial because to us, even though we've had all these different concerns over the last year, earnings have been key. So we're not making any substantial changes yet, but we're obviously monitoring the situation closely. And I think diversification is key.
Diversification key here, but are there implications for rates? And would there be signals that the market was sending that would indicate that there is a rising fear that Fed independence will be challenged and that there's less credibility when it comes to setting interest rate policy?
So some of the things that we're looking for around the concerns or questions about Fed independence is the bond market reaction and inflation expectation. So, and also the dollar. And what are we seeing today? Well, we're seeing a modest shift in each of those. The 10-year, it's up about 3 basis points, so not severe, but it is moving up. You are seeing the U.S. dollar weaken about 40 basis points as well, and you're seeing gold up. So what does that say to us? Well, one, we've been positive on gold all last year. We still see the benefits of having gold as a diversification in a portfolio. We still think that makes sense. And even though we still maintain this modest U.S. overweight, we've been increasing our international exposure over the last year. And one way the international markets benefit is if the dollar weakens and the local currency increases, and you're seeing that today. So that's the way we're thinking about the world more generally. And I would say, lastly, we've been Team USA for several years. We've been bringing that in because of several developments, and this just reinforces that global diversification is really key.
So in other words, Keith, it's not as though you're saying jumping on the quote unquote sell America trade per se, maybe lighten up on America or rebalance a little bit towards international. In other words, maybe a little bit more nuanced than just the sort of sell America trade.
Yeah, and the way I think about it is, we're not making a change just because of the headline today. I would say relative to where we were 18 months ago, we have more international than we had before and a little bit less U.S. than we had before. But we still have that tilt. And also, when we have news headlines like this, I also don't want to get lost of other factors that will matter. I mean, like I said, the earnings season, the AI theme is still alive and well. I mean, just over the weekend, you saw this announcement by Walmart with Gemini, and Walmart stock's up 3%. That's not a recommendation on Walmart, but it's just saying, hey, this AI theme and this move to adoption is going to be really important. And ultimately, earnings drive the stock market over time. So I just don't want to, this matters, but it's not the only thing that matters. And corporate profits, I would say, over time matters more.
And Keith, I'm glad you talked about corporate profits because I want to get your take on the gap between that tech earnings growth and everything else, or put another way, sort of growth versus value, which is that debate's come back into the fore recently, right? We've seen values start to creep up a little bit. And I know the expectation is the growth still expected to outperform value, or tech's expected to outperform in terms of earnings, but the gap's closing a little bit. Is that enough of a justification to see continued gains in some of those value stocks?
Yeah, the way we're thinking about this is kind of similar to the U.S. international story. We still like tech and communication services long term. Those are legacy positions. But I think it's not either or. I think it's both. I think unlike in the past where it seemed like the tech trade was it. What we've done in our sector strategy over the last couple of months is we went to a overweight in industrials, which is more of that global kind of uptick in the economy. And then we also upgraded healthcare as well. And then more recently in December, we were underweight energy and materials. We upgraded those as well. So I think this broadening trade, which it seems like everyone talks at the beginning of each year and it hasn't worked out, we're actually seeing it actually start to work out. And the difference this year, or heading into this year, we're seeing those earnings broaden out as well. So it's being supported. So I would just say it's a combination of both, but I would not get rid of your tech at this point. I just think there's more opportunities beyond tech is the way I would think about it.
The broadening maybe has finally arrived. Keith,
maybe.
Thanks a lot. Appreciate it. Good to see you.
Thank you. Great to see you as well.
Thanks.